Hi guys, welcome back to another video. So in this video I'm just going to talk about effective strategies that you can use to grow a small forex trading account. I'm not going to talk about nonsense stuff in this video, so stick around until the end of the video. I know most of us, we start with small accounts. That's why I'm making this video. Because we start with small accounts, many people often find themselves blowing through their trading funds. But based on my own experience, because I've done it, I've been there, I've done it, I've tried all the other stuff out there, there are some things that I've learned about growing small accounts. So now I'm here to give you my guide through growing small trading accounts. By the way, if you're looking for a forex broker, a reliable forex broker, see the links in the description box below. I've been with my broker for quite some time now, more than 5 years now, and they've never let me down. So if you are in the market for a broker that accepts trading deposits as low as $5, $10, you can actually sign up with the broker in the link in the description below. Okay, so without wasting much of your time, let's get into my 5 strategies for growing small forex trading accounts. So the first thing that I'm going to be talking about, I'm hoping that you probably have a pen and paper and you're probably jotting down these notes. If you miss anything, you can always rewind the video and watch it over again, and feel free to recommend the video to your friends who are also struggling with forex trading. So the first thing that you want to master, the first thing that you want to be able to be on top of is risk management. The simplest way to grow your small forex account is by managing your risk effectively. I always say the first job of a trader is as a risk manager. It's not to make money, but to manage a risk. Some people nowadays, they recommend that you allocate 2%, 1% of your trading account for each trade, which means if you have a $1,000 account that you are trading with, you probably should be risking around about $10, $20 per trade. However, the temptation is usually that if you have a $1,000 account, you want to risk the whole $1,000 account. And it happens that sometimes if you are lucky, you might flip that account with a 1:1 risk to reward ratio, like quick. But I'm asking you, how long do you think that's going to last? Yes, you have watched a lot of videos on YouTube where people have been flipping their accounts left, right, and center. But trust me, what they don't tell you is the many other accounts they blew in the process of flipping those accounts that they show you on YouTube. You can flip an account, I give it to you, but it's not a consistent strategy that you can rely on. So it's very, very essential to understand that you need risk management if you are going to be looking for consistent long-term success in forex trading. The first thing that you need to master is risk management. If you're not happy with the 1%, 2% that's recommended by many traders, find something that is workable for you, but don't over risk your account. Try to be around for the next day, the next week, the next month. Don't blow your account on a single trade. Number 2, high probability trades. I can never ever overemphasize on this. Most of the time I see traders with this idea that because they are trading, they always have to be in the market. They always have to be in the market looking for trades left, right, and center. They have to be clicking, buying and selling every which way. That's the wrong approach to trading, guys. You don't need to be in the market each and every day. Hey guys, I know some people who actually only trade once per week. That's all. They take only one trade per week. I know of people who wait for one trade per month and it's working for them. What's the emphasis? What's the point there? The point there is you need to only focus on high probability trades according to your trading strategy. So you are going to focus on only high probability trades if you are going to be growing that small account. Look for setups with multiple confirmations. That's what I'm talking about. Look for setups with multiple confirmations such as candlestick patterns, market structures, trend lines, support and resistance levels. Like, have multiple confirmations why you are taking that trade. Don't just take trades based on gut feeling. And don't just take trades willy-nilly. Left, right, and center, you're taking trades. Take only high probability trades. The more confirmations you have on a trade, the higher the likelihood that that trade is going to make you money. Avoid low probability trades, such as trading during consolidations, or maybe trading during low volume periods, when the market is closed. There are people who are like in the markets when the markets are closed and there's not much movement or there's not much anything happening in the market, and the person is looking for trades in that scenario. Like, guy, what are you doing? Number 3, avoid the small account mentality. Many traders with small trading accounts fall into the trap of consistently seeking quick profits. And as I said, it kind of ties with the second point. It leads to over trading and taking low probability trades, because people have got this idea that because I'm trading this small account, I have to constantly seeking quick profits. Instead, they end up over trading, and you know what over trading does? It leads into disasters. Instead, adopt the mindset of a seasoned trader. Even if you're trading a $100 account, visualize your account balance with 3 extra zeros. Give value to your account. Think of it as if you are trading a $10,000 account, even if it's a $100 account or a $1,000 account, $500 account. This will reduce your urge to want to always be trading or looking for trades, and it will help you actually to be more decisive and to be choosy with your trades. Again, don't just take trades willy-nilly. Wait for the right trades, guys. That's how you grow small accounts. Point number 4. Gradually increase position size. So this is another thing that I also did when I was starting trading, and I was watching and following all these celebrity traders on YouTube, social media, and stuff like that. You need to watch your lot sizing. As your account grows, you actually start increasing your position sizing, adhering to your risk management rules. It doesn't mean that your risk management goes out of the window. No, as your account grows, you are also gradually increasing the lot sizing so that it matches the growth of your account. So you start with a smaller lot size, and then, for example, if you have a $100 account, maybe you are using a 0.10 or 0.001 lot size, and then as the account starting to grow, then maybe you can move it to 0.15, 0.20, and things like that. So you are gradually increasing your lot sizing as your account is also increasing. Don't rush to start taking standard lot sizes. I've seen people do that. The moment they feel they are making money, then they start rushing straight to start trading multiple standard lot sizes, and it usually never ends well, guys. And the last point that I'll also talk about is one of the most important powerful wealth building strategies in forex trading is compounding your profits. So instead of always withdrawing your profits, reinvest them to increase your trading account size. I know there are people who probably start with $100. I'm giving $100 because my broker allows even $10, $5 deposits. So there are people who take $10 to $100, and then they withdraw the whole amount, then they deposit $10 again, instead of reinvesting in the account so that they don't have to start from zero again. They can continue pushing up until they are actually now trading with maybe $1,000, $10,000 and stuff like that. Instead of always trading with those small accounts. I'm not saying you shouldn't trade with those small accounts. It depends. But rather, if you are making money with your trading account, if you are not doing those prop firms and you don't have anybody's money to trade with, then rather reinvest your money into your trading account. And as you grow that account and you compound your profits, you'll find that in the end of the day, you started with $10 and now you're at $1,000. Now you're trading with $1,000 account. From $1,000 account, now you're trading with a $10,000 account, and you go and you go and you go, and you don't have to spend your whole life as a $10 trader. You don't have to spend your life as a $10 trader. So compound your profits. That's the fifth point. Now, as a bonus tip, stay committed to your trading journey. Many people give up after suffering some losses, some disappointments in the markets. Stay focused and committed on your trading journey. Embrace the process and don't just focus on monetary gains. Many people just focus on the monetary gains, and it never ends well, because they lose money today and then they throw away their toys. They are mad, they are unhappy, they are sad. Don't lose heart. Practice disciplined trading. Learn from those mistakes. Stick to your trading plan. And by mastering the points that I've talked about, you are probably going to find yourself on your way as a successful trader. So yeah, if you have anything else to add into this video, leave your thoughts and comments in the comment section below. Guys, this is how you would grow a small trading account. My opinion. I'll see you guys in the next video. Bye.